We want to continue talking about today's sell-off. One of the driving factors in today's drop was that weaker than expected retail sales print that we got. It was the biggest drop that we have seen in nearly a year. So here to discuss a little bit more about that, we want to bring in Jharonne Martis, a Refinitiv Director of Consumer Research. Jharonne, great to have you here back on set. So this drop, it was a 0.6% drop from October to November. Is this something that investors should be extremely worried about?
Absolutely, because this happened despite the fact that retailers were extremely promotional. In fact, this is the most promotional they've been all year, but also stronger than pre-pandemic levels. Refinitiv discovered in a collaboration with StyleStage. Now, what's interesting is that although more merchandise was on sale, the average discount came down a little bit, below the year-to-date levels and also below pre-pandemic. So this is telling us that retailers are offering more merchandise on sale, but they're discounting less in order not to hurt gross margins. And this strategy did not work. It did not entice consumers enough to open up their wallets. On top of that, November marked the first month that the unemployment rate hiked slightly to 3.7%, and also that media tech companies were announcing that thousands of layoffs. So as a result, consumers are, for the first time, concerned about the job security. The consumer confidence data of Refinitiv shows that for the entire year, consumers were optimistic they felt secure in their job. That's why they spent freely and went on travels. But now, for the first time, the entire year, they're concerned about their job security going forward. And so what that means is if the unemployment gets worse, they're going to put their hands in their pockets and hold back on spending.
The news about Black Friday was glowing. The numbers that Adobe threw at us, record-breaking Black Friday sales. How do you square that against this retail sales report?
Well, the retail sales report from the government is in line with the Refinitiv data that shows that for the holiday season, retail sales will, in general, the sales for retailers will be up 4% revenue. However, earnings are expected to decline 22.3%. And this is mainly because of inflation and higher costs. When you look at the 11 sectors, consumer sectors, 10 out of the 11 are expected to be negative and only one positive. And that is the hotels, restaurant, and leisure. So when we saw today's numbers of the government, where did consumers go shopping? They went to the bars, they went to the restaurants, and went and bought food in order to have those Thanksgiving dinners. But going forward for December, that's still expected to be the same trend. Consumers want experiences over things.
So, Jharonne, then what does that mean for the retailers over the next couple of quarters? Because clearly consumers are pulling back on spending. They've already had a pretty tough couple of quarters leading up to that. That, of course, had been reflected in some of their inventory numbers, the fact that they were trying to avoid discounting, which clearly they don't seem to be able to do. So could we be in for a couple of ugly quarters then within that sector?
Absolutely. Definitely the holiday season will be ugly. And going forward to 2023, earnings are still expected to be healthy. But really what sets the tone for the earnings estimates is really the month of January. So once we have those numbers, we see that analysts tend to change those numbers accordingly to what happens or what the companies report.
What are the expectations in terms of margins being trimmed moving forward?
Yeah, so as you can see, retailers are trying not to get margins hurt very much. And there are some retailers that are actually doing better than others. Lululemon is one of them. Lululemon is one that consistently has been raising prices and has seen no change in demand. In fact, for the holiday season, they're expected to be the strongest performer, seeing comps of 22% on top of difficult comparisons. This tells you the underlying strength of that high-end consumer and the loyalty of that brand.
Even their margins were slightly smaller.
Right, slightly margins,
reports,
but still one of the strongest performers. Yes. So if you can imagine even the strongest performer is seeing gross margins being hit, imagine the rest of the retail sector.
I guess we're trying to figure out how much worse it will likely get from here. When you take a look at today's print, month over month, it was a drop. Right. But year over year, we're still up pretty significantly. Could we be looking at a contraction on a year over year basis within the next couple of months, maybe within the first half of 2023?
So at least for November, December, January, for sure. That is guaranteed. That we're already seeing.
On a year over year basis.
Right. But then coming into January, those expectations could still change. As of right now, the expectations are that 2023 there'll be some improvement based on the fact that, yes, the labor market sadly might deteriorate and the Fed might loosen up their tightening. But other than that, January will really set the tone, and also the employment number more than anything.
Again, with the caveat, I am searching for positive news. Is some of this because of prices having come down a little bit naturally going to be reflected in lower spending numbers?
So it's important to note that consumers are not buying things, but they are still spending. So I want to point out that restaurants are expected to be extremely strong. In fact, when you dig into the restaurants' numbers, fine dining and casual dining, they're all performing quick service. Consumers want to go into the restaurant, sit down and have a meal, and they're going to pay for it, despite the fact that the prices are higher. It's just that they are not going to go to the mall to go shopping.
Whew,
That's your piece of good news.
Hey, yeah,
anything.
I'm still
People
searching,
are still
man.
want to go out to eat.
I will
We'll
continue
take it.
to search. Jharonne, Martis from Refinitiv, good to see you. Thanks so much.